You know the story here. We get the opening bell. Germany takes a while to open up, but I can tell you, it's not a secret, when it opens up, it's not going to look good. The FTSE opening up by around about 0.1% into negative territory, and then we keep rolling over. Let's give that a couple of minutes and give it some space. Look at the bond market this morning. A bit into the front end of the bund curve. We're down a basis point on a German 2-year, negative 80 basis points. That ECB news conference this Thursday just gets bigger and bigger and bigger. We don't expect anything from Christine Lagarde, but wow, is the pressure building on the ECB president to do more. Keep an eye on Italy. BTP's going the other way this morning. BTP's lower, Italian bonds lower, softer. They head south, yields heading north up 3 basis points at the front end in Italy. And over in Switzerland, they've got their own problems. Anne-Marie talking about that earlier in the week. At the front end there, that's where the bid is too. So look at the equity market. The FTSE now down by more than 1 percentage point, but there's the pain. Mainland Europe, Spain off by 1.5. The CAC 40 in Paris, France down by 2. And a story out of France is that Macron is considering another round of lockdowns, potentially 1 month. We'll hear from him later. I don't want to speculate. That's not my job. The reports are out there. You can read them for yourself. Chancellor Merkel is making the proposal. It is just that at the moment, the proposal to shut bars and restaurants for up to a month. So equities bleeding red in Europe. The FTSE MIB in Italy down by almost 2 percentage points. Commodities rolling over as well, Anne-Marie, this morning. Brent crude just about holding in there above 40.
Yeah, one thing with the commodities market, Jonathan, at least the oil market, was, of course, we had those stockpile data out of the United States, that risen. But this demand story is not going to bode well for the Brent or WTI contracts. WTI right now down more than 3%. We're under $39 a barrel. And as Europe goes backwards, that demand picture is going to get very, very difficult. And, of course, we're still waiting for the DAX to open. As Jonathan's been saying, that proposal from Merkel could be really key. And, of course, we're going to be waiting to hear what Emmanuel Macron has to say this evening. Jonathan, I know you don't want to speculate. I think there might be some nuances. If you close for a month, what does that mean? Do schools get to stay open? What kind of essential work gets to stay open? Why they take a potentially harsher lockdown?
Well, let's get to Brussels to find out. Bloomberg's Maria today is standing by. Busy morning for you, Maria. What have we learned so far? I want to try and avoid the speculation. Go through the proposals, the hard news, the reporting that you've been doing.
Yes, look, let's not speculate. I do want to say that nothing will be official until Emmanuel Macron says it's official. That's the way he operates. We'll have to wait until 8 p.m. European time to get that announcement. But I would say there are many reports now. There are multiple sources now suggesting that the French government has decided to take that decision to go for a 1-month lockdown. A lot of this has to do with the figures that we have been seeing this week. They have become concerned about the number of infections and the number of pressure on hospitals and have decided to go for a a draconian measure to shut down everything for 4 weeks. The tension in the story is that there seems to be a debate in the French government as to who is going to be allowed to continue to operate, which industries are going to be given the green light to continue to operate over the next 4 weeks, and what to do with high schools, because this is also a point that is key for many parents who are now going to be told you have to go back home and work from home. It's very difficult to do the two things at the same time. It's very difficult to have an economy that can operate on a normal basis or something that looks like normality when you have to juggle the two of them. So that seems to be the tension in the story at this point. But again, a lot of this will depend on Emmanuel Macron. Nothing is official until he speaks, but the debate has really shifted. We've gone from no lockdown to a lockdown now needed to protect hospitals and also save Christmas. This is something that we hear time and time and again, perhaps going for that sentimental value to soften the blow, because we are seeing that anger on the streets, that pushback in Europe, citizens asking themselves, how did this get so wrong?
Right, we saw those protests again overnight in Rome.
Good morning, everybody. Right from the beginning, I am placing a stop for euro. You can see we still hold position at 117.73, and I place stop and profit at 117.68. Okay, so here we purchased, as you can see from our ticker, that we always show positions we'll hold. Right now we hold position on euro and Japanese yen. So for euro, it's the time to sell short position at 117.68. So if it will reach this level, we'll sell and we'll have £500 in profit.
About a few weeks, but potentially longer.
Maria, great work, as always. Stay close, won't you? Much more still to come out of Europe with Maria Tadeo. The price action looks like this 5 minutes into the session. That's the sector story. Here's the index level. The Stock 600 down by 1.4%. The FTSE off by 1.2%. Losses on the DAX Monday, Tuesday, Wednesday. It continues. We're down by 1.9%. If you lift the lid on the Stock 600 and get back to that sector story, the pain in banks. We were down 1.4% on the bank index on Monday. On Tuesday, off by around about 1.7%. And on Wednesday, we're down by more than 2 percentage points. It's a rate story. It's a bid into the bond market again, and it's about the inability of the ECB to hike interest rates anytime soon with an economy that is really facing a double dip now. Joining us now, I'm pleased to say, is John Rowe, Legal and General Investment Management Head of Multi-Asset Funds. John, what a morning for it, sir. Your read, please, on the news coming out of Europe this morning.
Yeah, so the lockdown measures should be expected. We've got an R that's above 1, and so we are going to get this increased caseload until further actions are taken. I think what has really surprised investors has been the reluctance of governments to take measures that are known to reduce the virus but have limited direct economic impact. So in particular, we've seen this huge spike in caseloads between 11 and 29-year-olds, which has been very heavily linked to the return of education through September and October. And it would seem like secondary schools and universities would be an obvious place to start from a bringing down R with limited economic impact, but there's a real reluctance to do so because of the concerns over the social and development angle for those age groups.
So, John, tell me what you're doing this morning. Industrials, financials, energy, bottom of the pile, big sell-off in Europe, more restrictions coming potentially. Have you been de-risking around European cyclical names?
So not really around cyclical names. Some of those are already so beaten up. So in particular, say we take travel and leisure, you might assume that would have done very badly as this virus load picks up in the last couple of months. But actually, it's been one of the best performing sectors because around 80% of it is still closed in one form or another. And so from that perspective, the ability or the potential for it to be harder hit is is more limited. So actually, arguably for that sector, it's more about the vaccine timing than it is about the path between now and the vaccine timing. What I would say is we've been aiming for those sectors that are particularly unloved, so travel and leisure a good example, European telecoms another, where really we think that investors already have so much negativity towards the sector that provides a helpful tailwind for us going forwards. What we have been doing, equities, there's a lot of uncertainty, but when you look at the pricing in options, for example, it doesn't actually suggest that much negativity until maybe today. So actually, it was more around uncertainty than around investors being particularly concerned in one direction or the other, which may take a view on equities very difficult. What we've been doing instead is looking for positions where we can be negative, but in a way that gives us more of an asymmetry in the payoff. So we can get a large payoff if things get worse, while only missing out on a limited payoff if things get better. So that would be things like European and US investment grade credit, and equally short inflation, which is actually in the US's case and also in the UK's case higher than at the start of the year.
John, it's quite contrarian how long you are in travel and leisure. We've had a terrible year for the sector. It's down more than 2% this morning as Europe continues to announce fresh restrictions. Europe is going in reverse. Do you think at some point you might want to say, actually, we're just going to have to leave it on the table because the vaccine front is just overblown? We don't have an exact vaccine just yet. At one point, do you think potentially that long is just not going to work?
Yeah, so we only put the long on in the third quarter, so we actually missed out on the period where it was the worst performing sector. So it really is a kind of deep value contrarian view. And we have a basket of these laggards which that trade sits in. So actually for us, if you said in advance the market's down 2%, what do you think's happened to travel and leisure? I think the instinctive view is it should be 4 or 5. I mean, this is a sector that's at the heart of the pandemic. So actually almost the fact that it's broadly in line with the market is a kind of, in some ways, a surprise, I would have thought, to investors, and does highlight how much negativity is already baked in. That is one sector where the timing of the vaccine is arguably more important than the shorter term path. I think where we do need to be careful is that if we do get this escalation, then it might be the more preferred sectors that start to really get hit as people start to lose faith and those crowded trades get hurt more. So, for example, we've been trying to stay out of healthcare, which is kind of the most popular sector. It's very easy to go virus, healthcare is great, but of course there are downsides as well, such as elective surgeries being down and generally reduced hospitalizations as people are told to stay at home.
Hey, John, great to catch up, sir. I know you're going to stick with us to talk the United States. John Rowe there of Legal and General Investment Management. I want to turn to the price action just briefly. We're about 10 minutes in. You can see the pain at the sector level and the index level. The FTSE 100 down 1.5%. The DAX off by 2.3%. Switch up the board and turn back to the sectors just briefly. I want to talk about the bond market and what's happening with banks. This is the bond market right now. Bundesbid yields lower by 2 basis points to negative 63 basis points. I want you to take a look at Italy this morning because I think this is a really important development in the last 6 months. The Italian bond market has been really resilient, and what we face this morning is potentially some really choppy times ahead for the European economy. What we're not talking about is significant, though. We are not talking about redenomination risk and breakup risk. And when you turn to the Italian bond market, a little bit of softness maybe relative to bunds, but not the sell-off that you might have seen 6, 7, 8 months ago. And if there's a silver lining to a very dark cloud in Europe this morning for ECB President Christine Lagarde, it's that fact right there. That's the price action. Coming up on this program, we talk US assets with just 6 days to go until the election. Alongside Anne-Marie Hordern, I'm Jonathan Ferro. 11 minutes into this session, equities heading south. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
"14 minutes into the session, let's sit on the price action this Wednesday morning. Good morning to you all. The Stock 600 down by 2 percentage points, the DAX off by 2.7. It's a third ugly day for the equity market in Europe. Switch up the board. I was talking about the bond market briefly a couple of minutes ago. I want to return to that theme. In the bond market right now, a bid into bunds, yields heading lower by 2 basis points. And this is the story I want to talk about in Italy at the moment. If we had this situation 6 to 9 months ago, I don't think you would have seen an Italian 10-year creeping higher by 4 basis points. You would have seen something much more brutal than that. John Rowe's still with us, Legal and General Investment Management Head of Multi-Asset Funds. John, it's an important development. I'm not disregarding the weakness we see. It's there. You can see it on the screen. But relative to what we would have seen 6 months ago, how closely are you watching that ahead of that ECB meeting this coming Thursday, John?
Yeah, it's been a huge change. I mean, the way that Europe came together in its virus response with the recovery fund was that it answered a really fundamental question that investors had, which was, next time we get a real downturn, do we get the fragmentation and the infighting in the Eurozone, or do we get them actually pulled together and come up with a response that really helps those countries that most need it? And the recovery fund was a resounding, it will come together. And a lot of this has been funded by Germany, particularly if you allow for the rebates that some of the other countries have received, while countries such as Italy are receiving quite high payouts relative to other countries. It shows that necessary solidarity and increases the belief that actually crises could bring the European Union closer together rather than cause it to fragment, and hence, as you say, take us away from that discussion around the breakup of the euro. Now, against that backdrop, the ECB buying clearly really helps. We've seen extremely strong performance in Italy generally. So even if Italy was to give something back, that would be okay. I don't feel like this is a position where the ECB needs to act quickly, because Italy has done so well in the last few months that actually it's been a real outperformer, a big spread tightening. And currently the ECB buying, assuming ultimately they get round to more buying for next year, will be higher than the net issuance for Italy. So that's a fantastic dynamic, and it gives a real tailwind, and it makes investors very reticent to go short Italy in the way that they might have done historically.
You moved into neutral from your long view on the peripheral. What do you like in terms of sovereign debt in the region?
So we like, in particular, in the region, and we particularly like Croatia. And the reason we like Croatia is actually to do with European convergence again. So Croatia's on the way to joining the Eurozone. And as it meets those milestones, and we would expect Croatia to be at the short end of the time period it takes to join the euro from here, so around 2 years. And as it gets closer to that, we should see more convergence with Eurozone countries. So, for example, euro-denominated Croatian debt still trades at around 150 basis points over bunds, whereas Slovenia, which has already joined, trades at more like 50 basis points over bunds. The dynamics in those countries are not that different, and we see that as a real medium-term convergence play. Other than that, we still have some sympathy for Cyprus. We think there's some relative spread tightening to come there. But in peripherals generally, we have exited that side because we were just concerned that the spread tightening on Italy in particular had been so extreme this year.
John, it's been huge, and I have no idea if this continues, but certainly at the moment, I'm sure Christine Lagarde is happy with what she sees. Let's check back in a couple of days' time. John, we're about 18 minutes into this session. I'm aware that people, the early risers over in New York, will be looking at this now 4 hours behind us, waking up to Europe, potentially locking down a little bit more. Emmanuel Macron speaking later, could be locking down for a month. They are the reports. We'll hear from the man himself later this evening. Out of Germany, a proposal to shut bars and restaurants, and an equity market that just gaps lower, down 3 percentage points on the DAX, the CAC 40 off by a little more than 3%. John, 2 months ago, if I offered people this market where it is right now, they would have jumped all the way in, 2 hands full, up to their necks in European equities because they thought this reopening was more efficient. They thought we'd have more fiscal integration. That's gone wrong big time in the last couple of weeks. John, are you a buyer of this move that we see on this screen this Wednesday morning?
Not yet, and the reason for that being has been the inability of these European countries to keep R below 1. So when you actually look at the measures that are needed, then there are some left that have relatively limited expected economic impact. So in particular, reduction in interactions in secondary and universities. Those are areas that have seen the biggest spike in case rates, and they're very clearly a part of the population that could be targeted to bring this under control. But it's the surprise for investors, and we include ourselves in this, and we haven't been long equities, but we have been concerned that the volatility in either direction could be very high, is that governments have been so reluctant to control education. They've seen the social agenda as more important than investors had anticipated, and that meant universities and schools going back, and then a real reluctance to close them again.
Hey, John, great to catch up. Appreciate your time. John Rowe there of Legal & General Investment Management. Here's the price action 20 minutes in. We are negative big time on the S&P 500. Futures rolling over, but nothing compared to the losses in the equity market in Europe, down by around about 3 percentage points on the DAX. Anne-Marie, bottom of the pile, energy stocks, financials, energy down another 3% on a stock 600.
Well, John, with Europe going back into lockdown mode and what Germans might be calling it lockdown light, depending on this proposal from Merkel, if that goes through, that just means that maybe less people will be driving and on the road, definitely less travel, and that does not bode well for a already precarious oil market, which really only Asia, Jonathan, is the one that's picking up in demand.
And for good reason, because of the China reopening. Anne-Marie, thank you. In the equity market, lower. In the bond market, bid. 10-year German government bond yields the lowest since March. Up next to Germany. Delivery Hero. Their sales double as the COVID-19 pandemic drives demand. It's the best performing stock on the DAX this year. And we speak to the CFO next on Bloomberg.
COVID-19 pretty well. We are part of the ecosystem, and our focus is to make sure that we can have the supply in terms of restaurants and riders. The first 6 months have been quite crucial for us. We onboarded a lot of restaurants to compensate the losses of diners. But so far, Deliveroo have been able to help the ecosystem, the restaurants, and as I said, the riders. So the lockdown is not a good news, but I think we're going to manage the situation and help the restaurants.
How have demand trends changed given these lockdowns in Europe?
Well, we've seen newcomers. I mean, people that haven't tried our services in general, maybe coming faster than that we have seen in the future. So they were trying our services for the first time. This is the case for the food business, but this is also the case for the grocery business. So I think the online delivery business, delivery in general, and not only food delivery, is having a boost through this COVID-19, so curfews and lockdowns.
The prestigious DAX is down 3 3/10% this morning. COVID front and center of Europe. You recently joined the DAX. Has that changed your strategy at all with the company, or even psychologically, the culture at the company, Emmanuel?
So the DAX listing has no impact on the strategy. I mean, like, you don't do a strategy because of the listing. So we continue on a growth path. We have a clear strategy for us. The investors know this, and the shareholders, and also the supporters. So this is a clear strategy. We'll continue on that path. But indeed, I mean, entering the DAX changed a bit the culture or the mentality. The scrutiny, especially in Germany, is by far higher. After the Wirecard disaster, you do have more scrutiny. So we have to be more focused. And that's the kind of culture shift that we have inside of the company.
Hey, Emmanuel, we appreciate your time this morning, sir. Busy morning for you. We'll let you go. Emmanuel Thomassin there, the CFO of Delivery Hero. From the City of London this morning, good morning, alongside...
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF IQ Europe. I'm Francine Lackwin. Over the next 30 minutes, will be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. Despite mounting virus restrictions and an imminent U.S. election, European investors keep adding ETFs. The region's market sees inflows of 4 billion euros in October. X-Tracker owners DWS reports a buoyant third quarter. Move over low cost.
I am moving up my profit on euro to 117.63.
Seen in the month-to-date flows is really the prominence of these flows into UK tracking funds. You'll see the United Kingdom first on the leaderboard when it comes to the one-month flows into ETFs, over $550 million worth of inflows. Now, if you dig underneath the surface, a lot of what's been getting that money are gilt tracking ETFs, which is a very interesting proposition at this moment. HSBC, for example, saying that the BOE has run its course of what it can do for QE. So next on the docket, they say will be negative rates, but still investors piling into those funds. So while the UK is enjoying this plethora of inflows, what has been on the other side? That is Germany. By far, German tracking ETFs bleeding funds, $514 million worth of outflows. Really, the German story for outflows comes from US-based ETF investors. One iShares ETF, EWG is its ticker, is really where the lion's share of these outflows are coming from. So perhaps that has to do with currency exposure or just a way for U.S. investors to play the rising coronavirus counts in Europe in general. But when you look at the outflows, you have Germany, you have Spain, you have France as well. And this is also, again, tied to the story of the economic concern over new shutdowns. Well, what will Emmanuel Macron announce in terms of what France will have to do to combat their highest coronavirus cases since April? So that's certainly part of the story. Now, looking beneath these numbers as well, you can really see, though, that the net inflow still is positive for the 1 month out. So the overall European concern over coronavirus still hasn't really thrown ETF investors off from investing in the overall market, Francine.
Danny, earnings from DWS, the company behind X-Trackers, Europe's second biggest ETF operator, what exactly did they say?
So surely this quarter, again, it was all about passive flows. You can see their net inflows, 10.5 billion euros, beat estimates and was higher than last quarter as well. 60% of those 10.5 billion euros came from passive products. Interestingly, their AUM, passive products only make up a quarter, but you can tell it's certainly growing with importance of their total AUM. Now, that means they still sit second, by far second, to BlackRock, who's the biggest ETF provider in Europe. We spoke with DWS CFO earlier, who said that their organic growth still looks fine in terms of getting more market share. Here's what she had to say.
If we look at who is collecting new money from inflows in the ETF space in Europe, we're second there as well. And I think that demonstrates the organic ability to grow, obviously to some degree. We've had 13 billion of inflows across 2 quarters in the ETF space. That's global. But I think having a really broad product suite, being able to respond to the product trends, enables you to grow organically to some degree.
Certainly all about picking up on those trends and growing their passive share. Francine?
Danny, thanks so much. Our Danny Berger there. Now joining us this morning, Peter Sleep. He's Senior Portfolio Manager at 7 Investment Management. Peter, thank you for joining us. When you look at the amount of volatility that we could see in the markets because of extra lockdowns from now until the Christmas period, what does it mean for how ETFs will be used?
I think ETFs will be used for macro purposes. Flows will follow performance, and if you have good performance in fixed income, you will see flows into fixed income. If you have poor performance in equities, you will see flows out of equities, and I think you've seen that already this year. Flows into equity ETFs have only been about 2% of the total market, whereas fixed income ETFs have grown by about 18% this year. Again, money chasing performance, and I think that will continue. If we have more quantitative easing, we could see more money going into gold ETFs, which have been some of the strongest selling ETFs this year, or ETCs, yes, I should say.
Peter, if you look at some of the havens in the ETF space, is it gold ETFs, or is there another way to play uncertainty in the markets?
Well, you mentioned gilts earlier on. High-grade government bonds is perhaps the best way, the best insurance to play volatile markets. But gold is a way of playing volatile markets, although personally, I prefer my hedges to have coupons and income, whereas, of course, you pay to own gold.
Peter, thanks so much. Peter Sleep there at 7 Investment Management stays with us. Now, coming up, after years of grabbing market share, lower cost ETFs have been losing out to more exotic and expensive new products. We'll bring you that story next. This is Bloomberg. A lot of is on the markets, European equity. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacroix. Now, is the overwhelming dominance of low-cost products in the ETF market starting to come to an end? Well, flows to the most expensive ETFs, costing 61 basis points or more, have risen this year to 6% of the industry total. That's the biggest share in 5 years. Now, growing investor interest in active and thematic ETFs have also helped drive the change. Well, joining us now on the phone is Athanasios Psarophagis from Bloomberg Intelligence. Athanasios, thank you for joining us. Is this a one-off, or is this really part of a bigger trend that's here to stay?
Hi, Francine. Good morning. Yeah, that's a good question. To me, it looks like more of a permanent change. I don't think that low cost is going to be going away. But what I think is a really telling sign this year is that if a product is differentiated or it's performing really well, like we're seeing with thematics and some of these active ETFs, investors are willing to sort of set aside costs and allocate towards something that's a little bit more differentiated. So, and why I think it's a little bit more permanent is if you look at sort of every year in the past, most of the flows have always been going towards the cheapest product. So it's likely that an investor is already likely allocated to the cheapest product already. So when they're sort of looking for something else outside of that core exposure, they're going to likely be spilling over into the more expensive stuff. So I think that this trend, I don't think it's going to be overwhelming, but I think we're going to see sort of the growth rates favor some of the more expensive products. And you'll see the lower cost flows just reaching more of a level of maturity.
Athanasios, what does it mean for the industry? So how do you see actually things shaping up over the next few years?
Yeah, what I think is two things. Is one, we're going to see more of a barbell split, meaning that the low-cost trend is still really strong. So we're going to see a chunk of those assets remain on that end. But we'll see sort of the curve flatten out, meaning that it's going to barbell and we'll see more assets sort of stay in the higher cost products. And I think this is going to be really important for the issuers as well, because they obviously, this gives them sort of a glimmer of hope. They see that these more expensive products are doing pretty well. They obviously are going to make more revenue from them. So I think we're going to see a bigger push from the issuers on the side of thematics, on active, on things like ESG. So I think for the industry, it's going to sort of level things out a little bit and make it look more like a barbell.
Athanasios, thanks so much. Athanasios Psorofagis there from Bloomberg Intelligence joining us. Now, still with us, Peter Sleep at 7 Investment Management. Peter, given what we were just talking about with Athanasios, what are the main trends that have emerged during, the COVID-19 pandemic? Maybe it's thematic, maybe it's ESG, maybe it's something else. Yeah. And how much will those trends even become bigger in the coming quarters?
The thematic, there's been a lot of talk about the thematic, and of course the performance of some of them has been excellent. Cloud computing, clean energy, video gaming, emerging market, internet. They're the top performing ETFs in the year to date. But if I look at the bottom performing ETFs, we also have a lot of thematic ETFs like global energy, oil, 3 times levered, all these. So you throw enough mud at the wall, some of it will stick. And I think that's probably the case for some of these thematic ETFs. It's still a small percentage of the market. I don't have exact numbers, but 2 to 3%. I think your colleague just mentioned. The real big flows, as I say, are going into things like fixed income ETFs, particularly in the United States, and big flows into gold and commodities as well.
How much are you expecting the European ETF market to grow? I mean, it's really dwarfed by the U.S. market at the moment.
Yeah.
How much more attractive will it be in 2021?
Well, I think it'd be as equally as attractive. You have to remember that I think one of the reasons behind the growth of the US market is the tax advantages they have. They don't, US ETFs don't pay capital gains tax, whereas as funds do. We don't have that problem here in Europe. So the European funds market, active fund market, has remained very competitive. And the fragmented nature of the European markets with listings in London, Amsterdam, Milan, Madrid makes it very complicated for ETFs to grow in Europe. They are growing, but not at the same level of about a fifth of the level of the US listed market.
Peter, how do you play Brexit through ETFs?
Oh, well, that's a good question. You probably, if you're a Brit and you're worried about the currency falling, you probably want to buy foreign currency ETFs. You probably want to avoid the UK market. If you're overseas, well, it's easy. You just avoid the UK market altogether and stick with North America, which will be entirely unaffected by Brexit.
Where do you see most value in high yield markets?
Well, we own a US high yield is, of course, the place to be. And there's some interesting niches developing in places like Asian high yield, which unfortunately is not represented by the ETF market. So you have to buy that in an active manner.
All right, Peter, thanks so much. Peter Sleep there at 7 Investment Management stays with us. Now, coming up, ETFs in China nearly doubled in value in the first half of the year. The market still less developed than in Europe and the US. We'll discuss that next. This is what the markets are doing. European equities down. Asian stocks were also down. A lot of concern about the impact of this worsening pandemic on economic activity in some parts of the world. The dollar is advancing. Treasury yields pretty much steady. The yen strengthening, but you can see the DAX and the CAC down some 3.3%. This is Bloomberg.
change is the defining issue of our time. So we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Markets on the move this morning, worried about the impact of worsening pandemic on economic activity as major European leaders are thinking about possible extra lockdowns and extra restrictions. I'm also looking at China's yuan steady. Traders also digesting news of the nation's banks abandoning inclusion of the key factor when calculating the currency daily. But you can see the DAX and the CAC really moving on the back of extra restrictions, down some 3.2%. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacroix. So could China become the next growth region for ETFs? Unlike markets in Europe, the US, and Japan, China, the world's second largest stock market, isn't yet overrun by exchange-traded funds. But a rule change making Chinese ETFs directly accessible to overseas investors could drive inflows. So-called feeder ETFs will help lower tracking errors and get round caps on foreign ownership. Well, still with us, Peter Sleep at 7 Investment Management. Peter, how do you play China? How do you get, is it even worth getting into Chinese ETFs right now?
I wouldn't buy Chinese onshore ETFs. I think there's going to be tax disadvantages if you're a British investor and maybe a US investor. I think you're probably best off buying ETFs on China issued in your region of domicile, Dublin or Luxembourg, just to keep your tax affairs straight. And the Chinese mainland ETF market is it's only 150 billion. Which, if you put that in context, it's half the size of SPY, Spider S&P 500 ETF, the largest ETF in the US. So it's a very small market, and most of it is money market funds. The 5 largest ETFs in China, mainland China are money market funds. So you're much better off buying a China ETF domiciled in Dublin and listed on your local market.
Peter, when you look at a lot of the volatility coming in Europe because of lockdowns, because of restrictions, first of all, do you play it differently to April and May when we had the restrictions through the ETFs? Has the market changed since the first lockdown?
Has the market changed? No, I think the market is the same in terms of how do you play it. Given that China is fully functioning and is enjoying GDP growth, that may be China may be an attractive market to invest in. That's one of the reasons why I mentioned Chinese high yield or Asian high yield, because Asia is working again, whereas perhaps Europe and North America is not fully functioning.
Peter, do you, again, when you look at some of the restrictions in Europe and lockdowns, will people go into ETFs instead of stock markets because it just gives that a little bit buffer? Like, how do ETFs play out if there's a big stock rout in the next couple of weeks?
Well, I think we found in February, March, that ETFs performed very well. Bond markets in particular dried up very, very rapidly, whereas bond ETFs kept on trading and was perhaps the only liquid part of the bond market. So I think ETFs are a good tool for you to manage your liquidity and to manage your portfolios.
All right, Peter, we'll be right back with you. Peter Sleep there. Now let's take a look at this week's winners and losers. Here's Danny Berger with your ETF leaderboard. Hi, Danny.
Hi, Francine. Well, one thing you'll immediately notice on the leaderboard is no European stock ETFs hitting the top 3. with new measures expected from Germany and France trying to curb these lockdown measures, it's not unreasonable to imagine that some investors would be skittish from jumping into these ETFs, at least for a tactical play. So hitting number one on our leaderboard today is iShares MSCI EM. So that's an EM stock ETF. A really interesting push and pull between stimulus optimism aiding EM countries versus the rising coronavirus case count. Now, Japan, government tracking ETFs coming in at number two with $187 million worth of inflows over the week. SMBC Nikko says that 10-year and 20-year Japanese bonds are getting a support specifically from European investors. They look at what's happening in German yields, bond yields falling below negative 66 basis points. So they're moving into Japan to get that yield, certainly playing out in the ETF market. And that last one there, the Euro overnight, that's tracking the Euro overnight index, that measure of cash. Now, part of this might just be the cash glut in the system. We've seen overnight rates fall to record lows for other measures. Morgan Stanley says that buying the Euro overnight index is a way to also play that rate cut bets have gone too far. Now, if we switch up the board and look at the losers, you'll notice EM also hits the top of the loser board, but in this time it's bonds, that third one there, iShares EM bonds. There is some concern from HSBC specifically that a lot of the EM bonds getting issues are more shorter dated, which means that we have this rollover risk, especially as some of the economy struggles there. Now, hitting number one is an iShares Euro bond. This could be somewhat of a similar play we saw from that Euro overnight. Selling bonds, for example, if you think that that rate cut bet is overdone at this point, ECB, of course, expected to hold rates steady. Finally, UBS All Country. I've said it before, I'll say it again. It's really hard to look at UBS flows as any bigger read and sentiment. A lot of people in the ETF space I talk to say, look, when you see UBS flow, it tends to be UBS itself making some adjustments. So I don't want to read too much in that. Perhaps we can read that as just UBS itself selling that MSCI All Country World Index tracking ETF, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest. Now let's get final thoughts with Peter Sleep this morning. Peter, when you look at the main concern in European asset classes, which is 100% lockdowns, it's 100% COVID-19, and the resurgence of the number of infected as we get into the winter months, how do you play it through ETFs thematically? Is there a healthcare ETF that will do well? Is there even a COVID-19 ETF themed that will do well?
I don't know of a COVID themed one. There are a plethora of healthcares. If you're talking specifically about European healthcare, there are European healthcare ETFs out there, for, sector ETFs. If you want to get away from Europe, as I mentioned, there's other things you could do, perhaps like a global clean energy, or if for lockdown, VanEck has their video gaming ETF, for instance, or there's perhaps Legal & General have an AI ETF if you want to play that way. If we have continuing quantitative easing, we're back to looking at things like gold and silver if you want to hedge.
And so, Peter, when you look at, like we're looking at extra restrictions in a lot of European countries, what does that mean for maybe some of the new ETF products out there? I mean, I don't know if, there's something that you would buy right now that's not available. What would that be?
What would I buy that's not available? I think you're pretty well served. It's not very expensive to launch a new ETF, and it's a very innovative industry, and the industry responds very, very quickly to demand. So we do have about 50% of new ETFs coming out at the present time are your thematic ETFs. So you're very well served. It's just a question of searching through and finding what you want. Now, personally, I prefer to be fully diversified. So I would perhaps go.
Position closed on euro at 117.63. We have £1,000 in profit.
A Christian ETF or a Catholic ETF you could go for. So there's a plethora there. I would personally, though, as I say, try and stay fully diversified and trust to the mathematics of it.
Peter, thank you so much. Peter Sleep, their Senior Portfolio Manager at 7 Investment Management. Now, that's it for Bloomberg ETF IQ Europe. You can watch the show every Wednesday at the usual time of 9:30 a.m. London time. We'll have, of course, plenty more on the funds and the flows from Europe, but also elsewhere in the world. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Europe in the red. The FTSE, CAC and DAX all down more than 2%. Emmanuel Macron is expected to announce a one-month lockdown tonight. Germany closes restaurants and bars for 1 month as well. Record turnout with less than a week away until the elections. More than half of the 2016 vote is already in, with 69.5 million Americans mailing in ballots or casting in person. And Deutsche Bank swings to a profit. The German lender lifts its outlook after debt trading beats Wall Street peers. Well, good morning, everyone. A heavy news flow this morning. This is Bloomberg Surveillance. I'm Francine Lacqua in London. Tom Keene in New York. Tom, I know it's 6 days from the election, so we'll really talk about some of the minutiae and the voting. I want to focus, of course, on Florida, Georgia, but also Ohio. But we also need to look at European leaders, with Emmanuel Macron, Angela Merkel, for so many months saying they will not go back into lockdown. The numbers speak for themselves, and they have no choice but to reimpose extra restrictions.
Yeah, I agree. There's a real shift there as well. In the United
United States, it's about the two different candidates and the two different approaches. Really stark yesterday with the president fired up in Lansing, Michigan. And to your Georgia, Francine, the emotion of Mr. Biden attending Warm Springs, Georgia, which resonates with Franklin Delano Roosevelt. What I would suggest, Francine, is markets on the move and different than yesterday. Yeah. Yesterday, less correlated, and today there's dramatic correlation. Notice the VIX out at a strong 36.
Yeah, Tom, I think the focus is really on these lockdowns, especially here in Europe, how harsh they could be, and of course, what that means for job losses. So I'm looking at, you know, a lot of the European stocks are actually at the lowest in 5 months. We'll have extra market checks today, but now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, President Trump appears resigned to waiting until after the election to get a coronavirus stimulus bill. The president told reporters he'll end up getting the, quote, best stimulus package you've ever seen. The White House blames House Speaker Nancy Pelosi for the delay. Pelosi put the blame on Senate Republican leader Mitch McConnell. McConnell's reluctance to embrace a larger scale relief bill. And President Trump is looking for a way to take voters from Joe Biden on energy issues. Bloomberg's learned the president may issue an executive order requiring an analysis of fracking. Fracking is used to get oil and gas out of underground rock formations. The president would require an evaluation of how the process could be expanded. Biden has denied the president's claims that he would ban fracking. France has reported its most deaths from coronavirus since April, and President Emmanuel Macron is preparing new measures to control the spread of the disease. On Tuesday, the French government reported 523 deaths. It also says the number of patients in intensive care may rise to the peak level of the first wave. And the CEO of Johnson & Johnson says that everyone missed how bad the coronavirus outbreak would be. Alex Gorski was interviewed for the latest episode of The David Rubenstein Show.
All of us have underestimated the dramatic impact of this outbreak. I mean, if you would have asked most people 8 or 9 months ago if you would ever see the kind of impact that we're, seeing around the world right now, few would have gotten it right. But I think there are lessons to be learned. First and foremost, I think, is the importance, David, of global public health. And I think going forward, we're going to understand much better that, if we don't have global public health security, we don't have national security, we don't have economic security, and we will not have security as societies.
Don't miss David Rubenstein's full conversation with Johnson & Johnson CEO Alex Gorski tonight at 9 p.m. New York time. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. To start the hour, let's go through the data very carefully. Our equities, bonds, currencies, commodities, futures deteriorate, negative 44. Dow futures under 27,000, and the VIX out a solid 3 points, 36.15 on the VIX. I don't usually do percent on percent, but that's an 8% move on the VIX. Don't correlate that to price, but there it is. Yields do come in. We've gone from that 0.80 level on 10-year yield to a 0.76 as well, with the tendon curve flattening. I think oil speaks volumes, with Brent crude moments ago under $40 a barrel, a $37 on West Texas. We're not there yet, but we'll get there. On foreign exchange, the litmus paper of the global system, dollar stronger. Yen resilient here versus euro. Euro-yen clearly shows weaker euro finally giving up. John Farrell's been very good about the resiliency of the euro. Swiss franc really doesn't move all that much. And Francine, I've got to come back to the headlines at about 3:30 New York time of Turkish lira and the central bank scrambling to protect lira. It's not getting done. Turkish lira crushed rapidly from that 8 level out to 8.26 lira. It is unraveling.
Extra long market checks today, Tom. I thank actually Tanya, our producer, who alerted me to the fact that Brent was below $39 a barrel.
Yeah, once in a while she does
this
something
is
good.
really amid a flight in risk assets. So that's, first of all, let's start actually with European stocks. So they're dropping to a 5-month low, and this is really because of coronavirus infections going higher, tougher lockdowns adding to the worries of this economic hit from a pandemic. So the talk I hear more and more is this a W-shaped kind of recovery, and what that means for job losses, what it means for central banks, and also forecasts. Haven assets, Tom, as you were saying, such as treasuries, the dollar and the yen, they're rising. I'm looking at the VIX, the measure of U.S. equity volatility, climbing to the highest level since June. And you're absolutely right, crude oil, again, oil declining below 39 briefly, now at $40 a barrel amid the flight in risk assets. So we'll have extra market check and extra long market checks throughout the day. Joining us now to talk about the markets and to talk about possible lockdowns is Geraldine Sundstrom, PIMCO Portfolio Manager, Asset Allocation. Geraldine, thank you as always for coming on Surveillance. When you look at the extra lockdowns or extra restrictions in Germany, in Italy, in France, what does it mean for the kind of recovery that you're expecting, and what does it do to yields?
Well, these are very sobering news for all of us in Europe, and it's unclear how the pandemic is going to develop for this winter in the Northern Hemisphere. In terms of markets, of course, there is some, unsettling situation. PIMCO had warned that it would be, we went down the elevator, it will be up the staircase with bumps along the way, which means that you have to keep quality in portfolio regardless of which asset class you're looking at. Safe government bonds belong to portfolio, higher grade credit, and when it comes to quality, a fair dose for equity, a fair dose of quality. So I think, you have to remain prudent. And that said, also look a little bit out on the horizon and differentiate the short-term volatility and all the sad news that we're going to confront with probably a better outlook sometime in 2021.
Geraldine, what does it mean for central banks? If you look at the trend that we're looking at, which is more lockdowns, so more economic pain, will the lift come from, a stimulus, fiscal stimulus, or once again, will it be left for central banks to do more?
I think both fiscal and monetary will have to be utilized, and they will have to cooperate. Of course, if there is, more fiscal stimulus to deal with a second wave of pandemic, this also means more issuance of treasury bonds and government bonds throughout the world. So there'll be a tendency for curves to steepen, and we will have to see if central banks step in to keep the situation under control, which means that other safe haven like gold could benefit.
Geraldine, I want to congratulate you. As you mentioned, PIMCO's absolutely nailed this vector of lower and lower yields and the sluggishness that's out there. Do you envision a new regime of new, greater negative yields in Europe? I see Swiss 20 today. I see the German 2-year really begin to test recent, larger negative yields. Do you envision new, larger negative yields?
It's totally possible in the sense that people will run for safe assets if the pandemic development continue this way. But this will probably be, for a few months, and then things will normalize again. But certainly over the medium term, we don't think that yield will be going up very high regardless. This is going to take years to be absorbed. And central bank will have to help for this recovery. So very much so in the short term, yields could go much lower as people seek safe haven.
What is the to-do list then for fiscal policy and monetary policy from your position in portfolio management and managing real money? What is your wish list for Madame Lagarde and, say, fiscal stimulus from the major countries?
Well, I think there's two things really. First is to deal with the drama that is unfolding and business having to shut and people losing their jobs, so that to maintain some level of normalcy. And then down the line, I think there is something absolutely incredible that is developing in terms of all these countries finally having very large fiscal package looking at recovery, a green recovery that, another country this morning, South Korea, pledged a net zero emission. Japan, China, Europe, everybody's on that bandwagon. And this, I think, is going to launch incredibly interesting investments around the world in certain sectors. So there's a bright side to this in the medium term. For now, what we need is central bank keeping stability in financial markets and governments helping business that are getting shuttered by the pandemic.
Geraldine, I was going to ask you, how much volatility are you expecting in markets from now until year end?
It's hard to tell. Of course, year-end is always a strange moment for many people. This year panned out pretty well in most financial markets at the end of the day, so there'll be tendency to protect those returns. But I believe that central banks are totally on the ball and will be ready to step in if there were some dislocation. Which means that, in portfolio, keeping some powder dry, that's certainly what we're doing, because potentially some good opportunity could arise as well going into that year-end and potential lack of liquidity.
Geraldine, thank you so much. Geraldine Sundstrom there of PIMCO stays with us. And coming up in the next hour, we also look at FX with Ibrahim Rabari, the Citi Global Head of FX Analysis. We'll talk dollar, we'll talk emerging markets. That's, of course, ahead of the U.S. election. That's at 6 a.m. New York time. That's 10 a.m. in London. Remember, the clocks changed in Europe, but not in the U.S., so it's a bit of a quirky week. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
What would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
Bloomberg surveillance, terrific news flow this morning. Francine Lacroix in London. Europe really challenged, I'm going to say clearly on the equity markets, worser, that's a sophisticated term, worser off than the United States, but maybe that will amend as we go towards the U.S. morning. I'm Tom Keene in New York. With us, Geraldine Sundstrom of PIMCO. We've been talking here of those dynamics across assets and particularly within the fixed income space. I need to understand, Geraldine, and this goes back to Mr. Gross sitting in the basement of the Pacific Investment Management Company, clipping coupons off bonds as his first job at PIMCO. Geraldine, this is a few years ago. I want to go back to the idea as you stagger into 2021, how you clip a coupon or how you find total return. How do you do it?
Well, in terms of fixed income, we favor the higher yielder safe haven, like the US, Australia, or Canada, which still very high quality bond with a positive coupon. That's probably one place to start. I would say that potentially inflation protected treasury could be an attractive fixed income asset in the medium term. And then go for high quality credit. In the securitized world, there are still relatively more attractive yields. But of course, we can't hide the fact that this is getting increasingly complex, and you have to go into parts of the fixed income that are more structured, a little bit less researched, or less liquid to find yield.
How do you asset allocate to the European banks? If they were on sale a month ago, they're on further sale today, as John Templeton would have said years ago. What do you do with the EU banking system?
I think in the credit space, they are attractive in the sense that the capitalization of this bank are relatively robust. And I think central bank have shown that they've been more willing to help the pain of the negative interest rates. And that really would be it. Not much interest for now from the equity standpoint. They could have a bounce at some point for sure, but a lot of profit growth in the medium term will be challenged by protracted low interest rates and challenged by fintech, digital currencies, and other things. So I think really differentiate the fact that credit is probably a safe place. But if you look for strong profit growth, I think some other sectors are more attractive than financials for equities.
I was going to ask you, Geraldine, I was going to ask you, how do they actually, these banks, adapt to these protracted lower for longer interest rates? And actually, are we going to see the limit of negative rates? Is that it for what the ECB can do?
Well, certainly there can be more operation to try to help with the negative interest rate tax that there is now, and the ECB has been moving on this path. And then I think banks have to reinvent themselves a little bit. We are seeing this in the results of some banks in terms of trading activities, IPO, M&As. There's lots of things going on, and probably there will continue to be quite a few things. And then they will have to embrace certain things like more digital ways of doing business in terms of asset management and other things. So it's about embracing the digitalization of the world, and certainly certain banks are going to be better than others on that.
Is there another industry, Geraldine, where you could actually see value on the credit side?
I think we like mortgages and things that have to do with the housing market. This has been a very resilient part of the credit sector, presumably and surely because governments have stepped in to protect the income of household, and in fact savings rate are relatively high. So we think that this is an area that you can still get good yields even in the higher quality part of mortgage or non-agencies as well. So I would say this is another area that we like in terms of credit.
Geraldine, there's an underlying theory to this. You've been writing about disruption over the summer. And there's a disruption in our theory. It was convenient and comfortable, a 60-40, a 60-30-10, whatever the allocation was we used. Are those rules out the door?
Not entirely, but certainly balancing a portfolio these days is a lot more complicated than it used to be. So you're going to have to use other things. First, diversify your safe haven, using foreign exchange, using gold among safe government fixed income. You're going to have to be a lot more specific in the selection of securities in credit, but especially in equities. And be a lot more dynamic while keeping powder dry to potentially play contrarian in bouts of volatility. So I think a lot more active management is going to be necessary, because disruption really creates winners and losers, and finding this differentiation is paramount now in portfolios. especially with the recovery program that governments are putting in place, which are green and digital, and there are clear winners and losers coming out of those recovery packages.
Geraldine, thank you so much. Geraldine Sundstrom, an update there with PIMCO in asset allocation, writing some really nice essays. You can see them at the PIMCO website. Let me do a quick data check here. We're going to nail this in a couple of minutes as well. Futures negative 41, Dow futures negative 420. Simply Europe does worse in their mid-morning. In the early morning of America, challenges with a VIX at 36 level, now 35.86. One quick statistic on oil, we see West Texas threatening a 37 handle and Brent crude under $40 a barrel. Coming up on tech, yes, the suits and ties. They rarely wear suits and ties. They'll wear suits and ties to the hill. Yes, the elite will line up of tech to speak to Washington, but far more. Eileen Burbidge of Passion Capital on the growth, the sheer mass, the monopolistic tendencies. It's too early in the morning for fancy words. Monopolistic tendencies of American technology. Stay with us. Futures at negative 41. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. JP Morgan says a surprise win by President Trump next week could benefit U.S. stocks and the dollar. The bank strategists say a Trump victory would also hurt Asian assets. Joe Biden is currently leading in the polls, but Wall Street firms have recently cautioned against assuming he will win the election. Booming cloud demand is driving Microsoft's sales. The company's quarterly revenue rose a better than expected 12%. That's due in part to corporate demand for cloud computing services to support employees working from home. It was Microsoft's 13th straight quarter with a double-digit gain in sales. And that's your Bloomberg Business Flash. Tom Francine.
Thank you so much, Ritika. A lot going on in the markets today. Now, partly is because we're 6 days away from the U.S. election, but really a lot of the focus in Europe and also the same in Asia was on these extra restrictions or lockdowns that we could see as soon as today in Europe. So Angela Merkel of Germany moving to shut bars and restaurants for 1 month. We could see a similar, if not more, aggressive stance from Emmanuel Macron of France. And that's really hurting a lot of the European stocks. They're down between 1.5% and 2%. I'm also looking at some of the things in terms of risk assets. So oil declining below $40 a barrel amid this flight in risk assets. VIX up, and if you look at U.S. equity volatility, so VIX up, and I'm also looking at the dollar and yen rising, Tom.
Very good. Coming up on Generous Electric, Lawrence Culp with an interesting update. This is Bloomberg. Good morning.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Surveillance. Good morning, everyone. Markets on the move. Francine Lacroix and Tom Keene. The earnings calendar. There it is. Of course, Microsoft doing better than good. AMD, a bit busy. Miss Sue really showing up. Look at the stock performance of Dog. AMD for years. AMD couldn't get out of its way. And the engineer from the Massachusetts Institute of Technology, Miss Sue, has just done a miracle job at AMD. They acquire Xilinx. We move forward to the fun and games of technology. Yes, Amazon and Apple front and center there. Maybe Google. It's not Alphabet. It's Google. Eileen Burbidge knows. I only call it Google. It's not. It's never going to be Alphabet. Worst name changing ever. Eileen Burbidge is qualified to speak to us on tech. She's Tim Cook's worst nightmare. She's not upgraded her iPhone since an iPhone 7. She's really almost like back to the flip phone. She joins us now with Passion Capital Partners. Eileen, let's rip up the script here. Is that shell game going to continue? Are we still going to be fools across all of technology and feel we have to upgrade with the technology?
I'm afraid that's probably the case. And I have to defend myself a little bit. I have an iPhone 10, so not quite as bad as the iPhone 7, but I think I'm going to be a ways off from getting the 12. But yes, I think, we like these dopamine hits, right? And these tech companies, they're counting on that. We like new, shiny things, whether they're in our ear or whether they're to hold in our hands. And so I do think human nature is working in their favor.
To the regulation ballet today, and Eileen, I go back to Michael Mauboussin in this iconic paper for Credit Suisse years ago on the network capabilities, the way these companies will build out. Michael was dead on about the mass of these big companies. How monopolistic are they?
I mean, I think that word has so much room for interpretation. Do they hold a monopoly or have some sort of, unfair market position with things like search queries or surfacing content? Absolutely. Is it impossible for others to compete with them? I don't think so. I think the rise of whether it's a TikTok, whether it was an Instagram years before that, Twitter before that, when we thought that, Google was going to own the world, there's always entry. There's always entry points. The smarter ones will continue to be acquisitive and use M&A to enforce their internal innovation and to compete against the upstarts, but there's always room for competition. So I think it's yes and yes in answer to your question.
Eileen, we know that the heads of America's biggest internet companies today will testify, and they will probably invoke protection of 230, Section 230, that basically says they need to regulate their own sites. When will regulators crack down significantly on a lot of these massive tech companies?
I think it's going to take a while. I really do. I think nobody really knows how to get this balance just right. Who's going to, moderate the platforms, then who's going to moderate the moderators, who's to say what's conservative or biased or left-wing or radical. And I think there does need to be continued scrutiny and conversation, though. I think it's the right thing for there to continue to be dialogue. The question is, given how much money the big tech companies throw at lobbying, whether or not we ever actually get anywhere, or we just continue sort of spinning around in circles. But we really absolutely do need the companies to take more responsibility and accountability, and we need the regulators to hold them to that account.
But will they start policing content a lot more? They've started in certain cases, but is that like 2% of what's out there, or will it grow?
Yeah, I was going to say they already do it, and I think one of the outcomes of, this global pandemic and COVID-19 is all of a sudden you realized, actually, if a platform does want to take down misinformation that's affecting people's health, it actually can do that. And funny enough, maybe they chose not to do that when it was about certain demographics, mental health. And so there is the technology. I do think they need to be pushed to employ it. I think the question is then how far they go and who's the one to judge. But I do think we need to keep talking about that. And you're right, it's not to any great degree. We're finally seeing evidence that all along we knew they could do this if they wanted to. So now they need to apply it a little bit more broadly and judiciously as well.
Eileen, there's a lot of talk about diversity. You came out of Urbana at Illinois. Lisa Su came out of MIT about at the same time. And yesterday we had the triumph of Lisa Su in AMD as well. I want you to talk right now about this burgeoning reality of women in engineering in executive positions seem to really be able to get it done. How did she tame the AMD beast?
Well, I can't speak about her techniques, but I think it's right. I think it's I think we really can get it done. I think women, I think ethnic minorities, I think a lot of underrepresented groups have probably been used to working harder to prove themselves than maybe the sort of dominant demographic. And I think it's brilliant that, you know, we're getting more space to do that and more recognition about those efforts. But I think that's just, you know, people from all walks of life. And that's why increasing diversity and having greater inclusion at decision-making roles is so important, and because it produces results.
Eileen, is there anything in, you know, given we're all working from home for a big amount of time, given we're seeing extra restrictions and lockdowns in European countries and elsewhere, are there any unicorns, maybe in Europe or elsewhere, that you'd be looking at as an expert?
Wait a minute, let me translate this. Eileen, Francine needs a stock tip. What do you have?
I'm sure I can't give a stock tip, but I do think since we're going to see all the results for the big tech companies coming out this week, and you'll see, you know, you already spoke at the top of the hour about Microsoft. You know, cloud sort of based services aren't going away. That's just going to continue to just sort of grow. You know, I think what's going to happen is you're going to have other players come in, so that you won't just have the dominant monopolies in quotation marks. But I think cloud-based services are going to continue because everybody's working distributed and remotely, and everyone needs to work and have access to the same services. So I keep looking in that sector, but I think there's going to be a little bit of disruption or innovation in some newer players coming to the fore because people want choice. And maybe to, you know, Tom's opening question to me, I do think people are going to still want to communicate with others and do that in better ways and with more novel devices or more up-to-date handsets.
Eileen, thank you so much. I recommend, Eileen, this Also Hot Blue. The iPhone 12 Blue seems to be the one selling right now. Perfect for Eileen Burbidge of Passion Capital. No, Francine, I haven't upgraded yet. I just protest, or will try to protest.
Is it, what, 12 days in and you haven't upgraded?
No,
Tom, you're losing your touch.
I'm a late, what do you call it? Late whatever it is.
Adopter.
Yeah, late adopter. Thank you. My brain's going here with all that's going. What is going on is futures deteriorate, -47. Dow futures -443. Francine and I are watching Istanbul and Ankara, the Turkish lira. There's no other way to put it. It is in free fall. With our news in New York City, here's Ritika Gupta.
Morning, Tom, Francine. Tropical storm Zeta is expected to become a hurricane as it crosses the Gulf of Mexico. Zeta is picking up steam after hitting the peninsula and is on course to make landfall in Louisiana today. It would be the 5th storm to hit the state this year. The National Hurricane Center is warning of a life-threatening storm surge. Coronavirus hospitalizations have risen at least 10% in the past week in 32 states and Washington, D.C. New Mexico led the way with a 68% increase, followed by Wyoming and Connecticut. South Dakota, Montana, and North Dakota have the most current patients per capita. The month-long surge is putting a strain on the U.S. healthcare system. And President Trump has slashed his advertising budget in Florida. The campaign is now counting on the Republican and National Committee to carry the message there. Instead, the Trump campaign is shifting resources to industrial northern states that carried him to victory in 2016. Since Labor Day, the president has cut $24 million from his national ad budget. Joe Biden has added $197 million. And the U.S. government is warning of an advanced North Korean hacking group. According to the Department of Homeland Security, the hackers have targeted the U.S., South Korea, and Japan. They're said to focus on foreign policy and national security issues related to the Korean Peninsula. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Again, futures at -46. A VIX now out almost 3 points, 36.28. That is a big move in the market. David Weston focused 6 days on to the election. He will pause on technology, balance of power. Michael Wolff of Activate, that is the right person to talk to about the strategy forward for technology as they strategize about the politicians in Washington. This is Bloomberg. Good morning.
Retail, I think, is strong. We see a lot of people ordering online or going to the grocery store and buying and eating at home. We just don't know what restaurants are going to do this year in the state of Florida, which is the largest consumer of the crab.
The 2020 presidential election is in the home stretch, and a handful of states will decide who occupies the Oval Office. I'm David Weston. Join me for our second Swing State special as we turn our focus to Florida, Pennsylvania, and Michigan this weekend on Bloomberg Television.
We've basically doubled rates revenues now for 4 quarters in a row. And so for us, the sustainability of these revenues is a key factor, and we think a significant amount of it will stick. We think the second quarter experiences showed us that the households and corporates are relatively resilient, and governments are in a position to support the economy through this period of uncertainty.
CFO talk from the head of Deutsche Bank, Mr. Moltke, von Moltke, rather, I should say, having really quite a good day. Here's what you need to know, and Daniel Schaefer just did fabulous work on this over the last 12 hours. If you want to buy 6 bedrooms, 5 baths, 26,000 square feet on 4 acres in Frankfurt, you got to pony up $11.3 million. That through Sotheby's this morning. To do that, usually you've got to have a good year in a hedge fund, or you have to get a bonus or plural boni out of your bank. Daniel Schaefer joins us now from Bloomberg on the only theme that matters in banking in Europe today. Who's right, Daniel? UBS, base pay up, lower bonuses, no bonus, or Deutsche Bank saying, wait a minute, we got to keep the troops? Who's got the right equation?
I think it's a matter of the overall pay that people will get. That is the big question. With the UBS, obviously, they just seen big disparities in terms of the base salary, particularly among some of the more senior ranks within the investment bank. So they decided they want to change it and increase the base salary while cutting bonuses. And Deutsche Bank, and we just heard James von Moltke there, the CFO, they are saying we really need to be able to reward our top performers for outperformance, which is actually what is UBS saying as well. We want to use the bonus in the future more to reward outperformance and not to change differences or to alleviate differences in base pay that people have. So this is the crucial thing for both banks. They need to compete with the US banks amid this trading boom and to be able to keep their talent, their top talent.
But Daniel, what I don't understand, or where I'm still trying to get to the bottom of, so UBS was saying they want to increase actually their basic compensation and maybe, make the bonus smaller. What does a banker nowadays want? Do you want a smaller bonus so that actually if you jump ship, it's not deferred? Or is it, is it more advantageous tax? I mean, what's the composition of basic pay versus bonus that is gold dust to bankers?
Yeah. I mean, I think in the competition with the US bank, it's still, for the European banks, from their perspective, it's still crucial to be able to pay the top performers, particularly like the star performers, to pay them higher bonuses, and not only to have them on higher salary, because they could be the ones that could be poached by the US rivals. So very much, despite the headwinds. Yeah.
Okay, cut to the chase, and Daniel.
That's at least what they're saying.
Daniel, cut to the chase. We need to get the gossip out of the way here. Schaefer knows everything, folks. That $11 million unit in Frankfurt is going to be bought by a J.P. Morgan executive, or is it going to be bought by a Deutsche Bank executive? How much is the inroads of American banks going to be?
Yeah,
And I mean, certainly the question is how many people will really be poached. But we've seen with UBS, for instance, that they've seen some of their bankers being poached by Credit Suisse and other banks within the country recently. So there is, you know, with the situation for them, particularly on the trading side, becoming better, there is more of a competition heating up again. But of course, that's not, you know, what a lot of other people like the regulators would say. They would say, you know, you need to be cautious in terms of how much you pay for the people, because you want you to preserve capital.
Yeah, for Global Wall Street, our article of the day, no question about that. Daniel Schaefer writing out of Frankfurt on this bonus salary conundrum among beleaguered EU banking. We've got much more coming up here as well. Futures negative 46, euros. The lira is just 8.29. Wow. Weaker lira. On Puma, or Pumbaa as the kids called it, Jorn Goulden will join us, their Chief Executive Officer. This is Bloomberg. Good morning.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. We digress right now to what we're all going to do. October, you know, we head into the season, and the kids need to be cool. The Weeknd, he's in the music business. The Weeknd says, well, he says, I can't feel my face. That may be true, but he's always styling in Puma. So we'll talk The Weeknd and Puma and a great, great recovery. Jorn Goulden joins us with Puma right now. Okay, somebody like The Weeknd or all that, they do that, and there's another shoe company that has Michael Jordan and that. How big is the celebrity thing, Bjorn, right now for Puma? How much is that in your resurgence and your ability to go past Under Armour?
Well, having partners that are relevant for the consumer is very important. So if it's athletes, if it's basketball players, soccer players, or musicians, singers, dancers, designers, having influencers to work with is very, very important.
What is the strategic goal, effort, or plan to take on Adidas?
We don't take on any competitors. We try to please the consumer, and if we do that, then the competition doesn't really matter. So I don't see me in a competition. I see me in the job of trying to please the consumer.
Are you not in a competition, Bjorn, of getting the next big thing, celebrity, to design your, Puma trainers? I think you've had Rihanna, you have Alexander McQueen. Who's hot and who's next?
If I told you who it is, then I would be in a competition. I think you would see we will have new partnerships being announced in the next weeks and months. And as you probably know from the football side, we signed a partnership with Neymar, a couple of weeks ago. And he is a big influencer, not only on the soccer side, but also on the lifestyle side. And you will see more announcements in the coming weeks.
Yeah, Tom can't wait to get a pair of those cakes. Bjorn, when you look at the markets that have done well for Puma and those that haven't, so Asia has reopened much quicker, stores are open, and yet sales weren't growing as much as other parts of the world. What's going on?
Well, you have to remember that China was hit by the pandemic earlier, so they had a strong recovery already in Q2, and therefore the Q3 was weaker from a development than many people thought. That was caused by a lot of inventory from all of us and a high level of discount. You will see China growing again at a stronger pace in Q4. Other parts of Asia, which are very dependent on Chinese tourists, are of course having a tough time, like Singapore, Tokyo, and other markets. America has had a very strong revival in Q3. The consumer is buying sneakers again, and the consumer sentiment has been very positive. And actually, all European markets in Q3 did well for us. So you see that after a pandemic, traffic is still down, but the consumer are again buying sneakers and sports apparel. Less people in the store, but those who come buy more. And then after, I would say, 2 months of opening, then it slows down a little bit, and then it takes off again. So I think you will see a mixed Q4, but stronger in Asia, and then the rest depends on the restrictions.
Bjorn, the reality in America, and I believe it's worldwide, and I've seen the kids from Asia line up in New York City buying the shoes and et cetera, is the digital shift from stores to Amazon and the rest, Zappos, and also at the same time, this crushing frustration that you can't get the cool pair of shoes you want. How are you going to deal with that in the future? The twofold shift to digital retail, and also, I can't get the weekend shoes I deserve.
Well, the future is going to be a combination of digital and stores, and you won't see everything switching to digital. But it's obvious that the communication with the consumer is more and more digital. But you also see that the consumer wants to see physically product. That's why you will see a combination of both. I don't think it's either or. It's how you combine it in a multi-channel approach.
Bjorn, we were talking in the break and kind of making a joke about it. If you're working from home, do you wear shoes? Do you not wear shoes? Do you wear Puma? Do you wear something else? What surprised you the most about how people wear your products and shop your products during a pandemic?
Well, barefoot is bad, so I hope people wear shoes. If not, the business will be down. I think what you have seen over the last couple of months is that, first of all, people do actually do more individual sports. People go walking, hiking, jogging, and therefore they need new shoes. You've seen a big upshift in activities like yoga and different fitness levels that you can also do at home. And that's not only good for footwear, it's also good for, training gear in general, fitness gear. What has been tough is, of course, team sports. Soccer has been tough because there has been restrictions in many countries that you're not been allowed to practice. But in general, I think people are still very sports interested. You see that on the television ratings. and people want to do something good for themselves, and that's why I'm very, very
Right.
optimistic about our sector.
My recommendation is sign up all of Tottenham. Thank you so much. Joran Golden, thank you so much with Puma, a resurgent Puma in design, their chief executive officer. It is something to be expected, and that when your currency craters like the lira is cratering, you better get out front and start messaging. Mr. Erdogan has had an exceptionally fractious set of months on politics and on economics, and today we see him speaking as well in Turkey, and also a large body of headlines coming out off of the Turkey inflation report. The head of the central bank in Turkey says instrumental independence is at hand for the central bank. We also see the market moving with lira out at 8.28. We will see if Mr. Erdogan can move that. We'll monitor that carefully as well. Coming up, maybe we will touch it. What do you see, Francine?
Yeah, Tom, I just want to make it clear that there are two stories to Turkey, and we can't lose sight of it. First of all, there's this massive rift between France and Turkey. I mean, if we look at the pictures of President Erdogan live, again, this is after Turkey really assailed France and French products because of the satirical magazine Charlie Hebdo for mocking President Erdogan in the front page. And then there's the inflation story, and that leads us to the Turkish lira story. So two big stories coming out of Turkey, Tom.
Coming up, Ibrahim Rabari of Citigroup. We will touch on this on foreign exchange, but particularly on a new resurgent dollar. Futures deteriorate, -47. Stay with us. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
This morning, there is continued market uncertainty. Yes, equities, they are weak and weaker now. Futures at negative 45, but now joined by lower yields, a stronger dollar. The yen strengthens. The Swiss franc, to the most part, does not. UBS, they will cut bonuses. Deutsche Bank will lift bonuses to, quote, protect the franchise and ensure top staff, quote, remain motivated. No word on the unmotivated at UBS. And Biden, well, he visits Warm Springs, Georgia, the home of FDR. Trump visits Lansing, Michigan, and says, quote, 3 weeks in, Joe's shot. Let's go, Kamala, you ready? This is Bloomberg Surveillance. I'm Tom Keene in New York, Francine Lacroix in London as well. Francine, the politics, we'll get to Kevin Cirilli here in a moment, but, you know, we see Mr. Erdogan speaking right now in Turkey, and as you correctly mentioned, the tension of this NATO member with France is extraordinary.
Yeah, it's extraordinary, Tom, and it's something that's been brewing, I think, over the last, I would say, 2 weeks. This is the very latest coming actually out of France. So after they put President Erdogan on the front cover of the satirical paper, Charlie Hebdo, really Turkey erupted with this Turkish-France feud, and, you know, Erdogan had asked all Turks to boycott French goods. So we'll see whether he addresses that in a shape or form. And, of course, the other problem is a markets concern, and this is an inflation concerns, and that goes back to the lira route that we've seen. And then, Tom, underlying all of that for European markets is extra restrictions, extra lockdowns on a lot of countries where leaders had said that they would not go in a second wave of lockdown. And that's hitting a lot of markets. And we'll have to look at what that also means for forecast for GDP going forward.
And, of course, it is idiosyncratic until it is not. We'll go into a full data check here in a moment. Mr. Cirilli standing by on the festivities 6 days out. Right now, with our first word news in New York City is Ritika Gupta.
Morning, Tom, Francine. President Trump appears resigned to waiting until after the election to get a coronavirus stimulus bill. The president told reporters he'll end up getting the, quote, best stimulus package you've ever seen. The White House blames House Speaker Nancy Pelosi for the delay. Pelosi put the blame on Senate Republican leader Mitch McConnell. McConnell's reluctance to embrace a larger scale relief bill. President Trump is looking for a way to take voters from Joe Biden on energy issues. Bloomberg's learned the president may issue an executive order requiring an analysis of fracking. Fracking is used to get oil and gas out of underground rock formations. The president would require an evaluation of how the process could be expanded. Biden has denied the president's claims that he would ban fracking. And France has reported its most deaths from coronavirus since April, and President Emmanuel Macron is preparing new measures to control the spread of the disease. In Germany, Chancellor Angela Merkel reportedly will propose closing restaurants and bars till the end of November. She's also expected to urge citizens to keep private contacts to an absolute minimum. And in sports, the Los Angeles Dodgers have won their first World Series in 32 years. The Dodgers beat Tampa Bay 3-1 to win the best of 7 series, 4-2. The entire series was played inside baseball's bubble in Arlington, Texas. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika Gupta wearing Dodgers blue. 3-1. I would note the second run scored by one M. Betts, sliding into home, showing energy. On behalf of all of Red Sox Nation, we congratulate Mr. Betts for his World Series victory as well. We move on right now. A data check. Let's do it. Futures at negative 44. Dow futures negative 431. The VIX out almost 3 big figures, 36.29. The difference yesterday, less correlation. Today, more correlation. Yields come in from a 0.80, 0.81. The yield now 0.75. And oil, Francine, there's so much to talk about. Lira just prints 830. And look at oil, Francine, 38.07 American. Brent crude under $40 a barrel.
Yeah, a lot of the markets are focusing, of course, on these rising coronavirus infections after we had extra restrictions in Germany. We're about to see extra restrictions, even lockdowns in France. And this is adding to worries about the economic hit from the pandemic. So I'm looking at haven assets, Tom, treasuries and the yen rising. If you look at European stocks, be it DAX, be it CAC, they're at a 5-month low. VIX up, climbing to the highest level since June. And then you're absolutely right, oil declining amid a flight in risk assets, Tom.
Very good. It is that time of year where they campaigneth and everything is drenched in symbolism. Some of the images that we saw yesterday from Trump and Biden.
Once again, Michigan is going to answer the call of history and show the world that Sleepy Joe Biden, his dark money donors, and his corrupt special interests, and by the way, there's never been anything like this.
The past few months, there's been so much pain, so much suffering, so much loss in America. More than 225,000 dead Americans because of COVID-19. 7,800 right here in Georgia.
On November 4th, you'll hear we're doing extremely well. You'll see. You know, they used to always say that Europe, look at Europe, look at Europe. Well, first of all, they count their cases totally differently. But look at Europe. Well, they have a big spike. And you know what? It's going to go down. And we had a spike in Miami. We had a spike in Texas, Arizona. It's all way down to very low numbers.
Everybody knows who Donald Trump is. Let's show them who we are. We choose hope over fear, unity over division, science over fiction, and yes, truth over lies.
For political junkies, a fun time of year to see it really heat up. Kevin Cirilli joins us, our chief Washington correspondent. Kevin, what is across all of the media, and frankly in the symbolism of those images, is a Democratic Party stepping on eggshells saying, do not repeat the last week of October and the first days of November of 4 years ago. Secretary Clinton was harshly criticized for what she did and how she campaigned. What is Biden doing different?
Well, he's going to the battleground states, and he's trying to flood the local media markets. And look, I mean, we always overplay this in the media, but it really is incredibly important. For the Democrats' perspective, when they did their diagnostics after the 2016 fumble that was Hillary Clinton's loss, they looked at this and said that they needed to attract Rust Belt voters in Michigan, Wisconsin, and Pennsylvania. What did Joe Biden do? He headquartered his campaign in the city of brotherly love, Philadelphia, and essentially said, I'm going to win back Pennsylvania, and I'm going to win back either Michigan or Wisconsin, and hope to make inroads in other Midwestern states. So that's been the strategy. And then at the bottom of the ticket, he got someone in Senator Kamala Harris that he feels is able to shore up the progressive activist base. And so that was his strategy. That is what he has been remarkably consistent on in terms of his strategy and his message. In contrast, President Trump, bulldozing through battleground states, has also, bear with me, been remarkably consistent in his strategy to try to really activate the Republican base. I'm struck by one thing and one thing only. The headline crossing the Bloomberg terminal in about the 5 o'clock p.m. Eastern hour yesterday. More than half of the ballots from 2016 have already been cast, Tom. 50.4% of 2016 votes have already been cast. Something like 80 million people have already voted in this presidential election. That's huge,
Well,
Tom.
I'm glad you give me that statistic because that's a moving number. 69 million out through the 70s, and Mr. Cirilli saying 80 million right now. We'll monitor that closely with Craig Gordon in Washington. Kevin, I need you to explain the symbolism of a middle-of-the-road Joe Biden visiting to the west of Georgia on the border, Warm Springs. It's all about a broken FDR and polio, but more than that, the day of his death outside World War II. Did he succeed in the symbolism he needs to find a middle ground?
Look, this is Joe Biden's sweet spot in terms of his rhetorical tone, and so whether it's riding the Amtraks after the debates or yesterday where he invoked FDR, I mean, this is someone who really has crafted his own personal political narrative with his own loss and his own life and his own suffering, and has been and has tried to parlay that into a unifying message. And so I'm trying to play this forward into next week, right? Because what you saw yesterday in President Trump, again, still remarkably consistent in trying to not talk about his own personal biography on the campaign trail, is one thing. I mean, when he said, and we just heard it, Fran, when he said you're going to have a good morning, the Republicans are going to have a good morning on November 4th, what he's saying is he could take a victory tour. There could be a series of speeches after the November 3rd election where he's saying he won or that things are moving in his favor, and ditto for Joe Biden. And I spoke to some sources yesterday who told me just as much, Fran.
Kevin, if we just go back to the people that have already voted, so, 70 million or 80 million, are these people that did not vote in 2016? Is it a different demographic? Do we know if these are people that tended to vote Democrats, or do we not know?
Friend, no one knows. And I've been trying to figure this out. I've been asking my sources, and I've been saying, how do we know any data about if these are first-time voters? Because that's the question right there. If they're first-time voters, who are they? Are they, or are these just political junkies, as Tom just alluded to, who were going to vote no matter what? Because if they are, then then we don't know what that is. We do know specifically where they're voting from, and that's where Democrats are eager and optimistic, because they're looking at traditionally deep blue districts, and they're saying, well, they've got the turnout vote in those districts, so that might be good for them. But hey, this is a new dynamic, so if the turnout isn't up, we don't know.
Kevin, we are getting a new poll, and this is a Washington Post and ABC poll. Biden leading 51% in Michigan to Trump's 44%. But my question, actually, if you assume at this point that the Trump campaign is faltering, I think I was reading there was one bright spot, which is Latino men. How is he getting through to them?
Well, this is a fascinating dynamic, I think, that the media has totally missed the mark on in the last 2 decades, which is that the Hispanic vote in America is not a monolithic block. This is not a monolithic block. It bears repeating. There are various different constituencies amongst Hispanic Americans, whether it's Cuban Catholics or other different types of Catholics. And the Hispanic community in Arizona is very different than the Hispanic community in Little Havana in Florida. And so that is, I think, something from an ideological perspective. On the issue of immigration, I can also tell you that's a very complex issue amongst the Hispanic community that is much more nuanced than often gets reported.
Kevin Swirly, thank you so much. Very exciting. Our Chief Washington correspondent. Coming up on Balance of Power, David Weston will drive forward this conversation. Look for it. Nancy Pelosi, the Speaker of the House, she's been on often to drive forward the message. Somehow, I'm not sure stimulus will come up. We will have to see. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Yes, good morning, everyone. Marcus on the move. We're doing more in the status space, as they say, at Citigroup. Futures -43, Dow futures -427. VIX out almost 3 big figures, shows attention, 36.22. Everyone in economics leans forward when Mr. Dudley writes. We're thrilled that he writes, honored that he writes for Bloomberg Opinion, the former president of the New York Federal Reserve. He speaks today on the challenges at hand and the degrees of freedom that we have. No central bank wants to admit that it's out of firepower. Unfortunately, the Federal Reserve is very near that point. America's future prosperity depends more than ever on the government's spending plans. Even if the Fed did more, much more, it would not provide much additional support to the economy. We are thrilled to bring you, within all this news flow, someone on economics, finance, and the placement of investment. Ibrahim Rabari joins us, Global Head of FX Analysis, Citigroup, and frankly, much, much more than that. Ibrahim, I want to take Dr. Dudley's comments globally. Are central banks out of degrees of freedom? To orphanides of Cyprus and Washington, is the toolbox empty?
Hi, Tom. It's great to be back. And I do think that there is a growing consensus among central banks, not so much that they're out of tools, but out of tools to do anything much by themselves. So there is, I think, still a lot that central banks can do, a lot that they can do to prop up markets when they take a setback, a lot to support governments to spend more. But when it comes to acting alone, I do think increasingly their tools at hand are pretty powerless at this point. And I think that's what Dudley, Orphanides, but frankly, pretty much most central bankers these days are acknowledging.
Abraham, what's so important here is the guesstimate of Q4 GDP, Q1, and into next year. I don't want you to play Dr. Catherine Mann and try to guesstimate GDP, but where is aggregate demand right now in a global sense? Are we ebbing away, or can there be some sustenance so fiscal doesn't have to come to the rescue?
Well, I think at this stage, we can be pretty confident that it is ebbing away again. So the idea was we had about a 4% global contraction this year, 5% rebound next year, and that would be in evidence in the final quarter and the first of next year. But it looks like we're heading towards a double dip. I think that's increasingly likely in Europe. In the US, we might still have a fighting chance to avoid it, but it will be a challenge as well. So I do think we are at a very, very delicate moment, and I think it's almost inevitable that follow-on fiscal stimulus measures will be needed in the coming months.
Ibrahim, if we leave the lockdowns, to one side, 1 second, we're in this like frenetic final push to the election on November 3rd in the U.S. What will move on the back of a Joe Biden win? Is it, some of the emerging markets that are linked to U.S. dollar? Is it ruble on his stance on Russia? Is it Mexico, or is it something else?
Yes, I think we have to distinguish between 2 or 3 cases. There's a Biden-divided government, a blue sweep, and then simply the election passing without a contested election. But the clearest outcome clearly would be a blue sweep outcome. And I think the clearest indication of that would be, it'll be a dollar move. It'll be a broad-based dollar move. And the currencies that move the most would move the most against the dollar as well. So you would expect all of the high-risk emerging market currencies, but maybe particularly the Mexican peso, to move quite strongly on that kind of outcome. For the other 2, we actually think that there are, for the other 2 outcomes, and perhaps that surprising Trump re-election case, I think the dollar trajectory is a little less clear, and maybe against fairly widespread dollar bearishness, we could see a little bit of a dollar rebound. And then again, all those currencies would look a little bit more vulnerable. And again, the peso is probably among the most common. But, the South African rand will react quite strongly as well. And then the one currency that is very much in focus these days is the renminbi. And I think the renminbi is one that would probably continue to do quite well under a Biden outcome, whether it is divided or in a blue sweep, but equally could be under pressure if we do get the surprise Trump re-election.
So, Ibrahim, let's talk about renminbi with another question. I know Tom wants to go Turkish there, but if you look at renminbi, how much of the focus is actually on what China's trying to do? So they want to make this currency a lot more international. They want to really grow it and make it much more powerful on a global basis. Is this just what the Chinese and PBOC are doing, or again, will it depend on US-China and that trade span?
There's really a lot of things coming together. I think that the starting point is, in fact, that at this stage, Asia and China in particular are looking quite solid from a fundamental basis. It's still growing on a yearly basis, is moving much faster towards normality. Yields are quite high and attractive. The central bank is relatively hawkish by global standards. But yes, US-China tensions are being downplayed a little bit, and the policy measures are trying to bring in capital. And you add to that the renminbi had actually been lagging some of the other currencies in previous months, and it is at this stage the standout, I think, consensus long position among global investors. And I think the election outcome could support that further if we don't get, once again, the surprise Trump return.
Global Wall Street, I want you to stay with us, please. Ibrahim Rabari will continue, and we will address a 3 standard deviation move in Turkish lira made moments ago. Coming up as well, not on a 3 standard deviation equity market, but nevertheless, where's the bid? Troy Gajewski will join us from Skybridge at Capital. We'll try to engineer a conversation on the path forward for the stock market. This is Bloomberg. Good morning.
Jacinda Ardern's Labour Party holding 64 seats in the 120-seat parliament. Now, that is interesting because it's the first time since the introduction of proportional representation in 1996 that any party has won enough seats to govern on its own. Now, this is by turns rather luxurious and also slightly terrifying for the new Labour government because there are no checks and balances on power. There is no upper house. Jacinda Ardern can pretty much rule as she sees fit. So she did rule out, heading into this election, any capital gains tax, but as revenue collapses, it must be very tempting to give that policy another look. She's also contemplating going into coalition with the Greens Party, even though she doesn't actually need them to govern. Now, the Greens Party did take forward a more comprehensive package of tax reforms to this election. So were she to govern in concert with the Greens, they could do much of the heavy lifting on tax reform, which may also prove to be a little unpopular with some portions of the electorate. So it's going to be very interesting to watch this new term. There's going to be a lot of new and untested MPs in the caucus. So a second Jacinda Ardern term is going to be full of all sorts of different challenges to the ones that characterized the first.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Good morning, everyone. Bloomberg surveillance, just huge news flow today. And right now, General Electric out. And this is important for global Wall Street, not only because it's GE, but Lawrence Culp is really beginning to put his stamp on the company. We'll be with him later today. We'll talk about that in a moment. GE, and they invented the idea of organic revenue growth and publishing that. It is down in this pandemic, in this global slowdown, a jaw-dropping 12%. Organic revenue year over year down 12%. But what's amazing about it is the margin contraction of 310 basis points. This press release and its attachments has Culp transparency all over it. It is amazing how he has revolutionized the presentation from GE to show the challenges. I'm going to say on a quick look, power does better than the beleaguered aviation. There's one statistic I caught here on, I don't know, page 112 or something, that the aviation fleet, Francine, parked is 26% of the planes are parked right now. Really extraordinary, Francine.
Yeah, Tom, I also want to just bring you, we should do an earnings wrap, a little earnings wrap, because we've had a lot of earnings here in Europe. And it's an interesting dynamic of what out of lockdown. We could go back into lockdown, certainly if you're in France or Germany. But what people have bought in the immediate aftermath of the lockdown, and it seems that shoppers, freed of lockdowns, splashed out on beer, cars, and sportswear in the third quarter. And we saw the spending revival that could prove short-lived, of course, as European governments again tighten the rules. But it's interesting to see the dynamics, Tom, of that kind of recovery and what people spent their money on.
Well, the shift from industrial to consumption there, and it is two different worlds and two different pictures. David Rosenberg yesterday really parsing out the difference between services and the mysteries there versus Mr. Culp's good producing segment. We'll have much more on GE through the morning. Just fascinating as a snapshot. Lawrence Culp on the 12 noon hour with David Weston. Futures at -44. Good morning.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
What would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I do think that the U.S. dollar, no matter who takes the White House, will be on a weakening trend against a lot of these emerging Asian currencies because they handled the pandemic so much better. They didn't blow their brains out on fiscal policy nearly to the extent that the U.S. has, and they're going to come out, along with China, a lot more quickly.
David Rosenberg on fire yesterday. There's no other way to put it. He really pushed against inflation worries and spoke of a persistent level and even disinflation out there and brought it right over to corporate America. We see that right now at Citigroup, where Christopher Danelig, a colleague of Ebrahim Rahari, has a sell rating on AMD. They bought Xilinx yesterday. They've been on fire, phenomenal shareholder return. And Ebrahim Rahari, what's so important here is your colleague, Christopher Danelig, makes very clear this is about a price war. Let's go Jack Welch 101 to pull 101, Ibrahim, to pull in GE as well. Is this disinflation going to lead to a lack of pricing power by corporations?
So we do think that the near-term effects of the pandemic are generally disinflationary. So in that big debate, we are siding with those that expect prices to be very subdued and maybe fall in much of the world for the foreseeable future. And that's in part, as you said, there is going to be excess capacity and pressure on pricing, but also because some of the technological advances themselves are disinflationary. The fact that we are using digitization to overcome large differences will weigh on transport and commodities, we think, for quite some time. What happens down the road, I think that will obviously depend to a large extent on where we end with policy outcomes, fiscal policy over the next few years. So I think markets are pricing a lot more uncertainty about inflation a few years down the line. But in the next year or two, I think those disinflationary pressures are going to be pretty acute.
Ebrahim, and I should point out, Dr. Rahari wrote on this at length 5, 6, 7, 8 years ago with Willem Bouter for Citigroup. That was absolutely brilliant. Ebrahim, I want to turn to what's idiosyncratic, and as you know, then it doesn't become idiosyncratic. I did the log mathematics this morning to impress Dr. Rahari, where we just moments ago tipped 3 standard deviation move on weaker Turkish lira. Ebrahim, I calculate off the Bloomberg a 4 standard deviation move is an 845 lira. What happens to the house of cards that Mr. Erdogan is doing when he gets a 4 standard deviation weakening?
Well, I'm not brave enough to venture a guess what exactly lies in store for the Turkish lira. But as you mentioned, there are clearly Turkey, I think, is a very idiosyncratic case, and maybe not a shockingly surprising degree of volatility that we're seeing, given that there are a number of things that in Turkey are coming together for volatility and maybe vulnerabilities. But it also just points the focus back at there are pretty substantial fragilities in the global financial system that have been tided over by central bank stimulus, and that will pop up every now and then when either things happen, and I think that was the case with Turkey more recently, or when there are more global systemic worries, whether they're linked to the election or whether they're linked to second waves. So I think, as you pointed out exactly, there is the idiosyncratic combining with some of more structural vulnerabilities that are relevant here.
Ibrahim, but if you look at the extent of the lira rout, what will it actually take for that to stop?
Well, the lira is a very interesting case because it's a very thin market. It isn't it isn't one of the commonly available tools of expression for foreign exchange use among investors, and therefore the volatility can be driven by fairly limited flows, let alone very extensive management by the authorities as well. So in the past, what we've seen, what can stabilize the exchange rate in the more recent past of the last year or two, was in fact making it more difficult for investors to be active in that market. But of course, the second and important plausible situation is some lessening of the political tensions that we're seeing to date. And then the third in line is it is a highly risk-sensitive currency. So even just some normalization in global risk appetite will in the end benefit the Turkish lira as well.
Ibrahim, what happens to euro? And euro has been, supported. I don't know whether the second lockdown will have lockdown or restrictions, but that's the direction of travel that we're looking at amongst European countries. I don't know whether that moves euro or whether there's going to be a backlash and we'll see more populism because of lockdowns and restrictions and people losing their jobs, and that will impact euro, but only longer term.
So we think that the judgment for us for euro dollar and the euro is that it will remain cyclical, as it will trade with global risk aversion and with the broader dollar trends first and foremost. And two, that we think those second wave concerns are also more global eventually than they are idiosyncratic. And then finally, that we think that they will be overcome, that we think that the vaccine breakthrough will come towards the end of the year, that we think post-US election, the dollar downtrend will resume as well. So we think those short-term reasons for a little bit of euro downside and euro dollar downside as well, they make a whole lot of sense. More risk aversion, more uncertainty about the US election, possibility of a bit of a dollar rebound. But we think that that will fade into the end of the year because all of these factors are mostly likely to reverse. But there's a question and an assumption in there. And that question and assumption is, one, that we will see the US getting a little bit hit harder on the COVID side, and two, that the tensions and difficulties that Europe is confronting right now, that they don't become systemic, that it will be still a relatively well-managed global cyclical recovery that includes Europe, that we don't see the resurgence of political or financial tensions in Europe. And those could easily put an end to the general euro uptrend. But for the time being, we don't see that happen.
Ibrahim, thank you so much. Ibrahim Rabari, our Citi Global Head of FX Analysis. Now we'll have plenty more, of course, on the markets. Tom and I looking not only at euro, looking at dollar, but of course also at Turkish lira. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tropical storm Zeta is expected to become a hurricane as it crosses the Gulf of Mexico. Zeta is picking up steam after hitting the Yucatan Peninsula and is on course to make landfall in Louisiana today. It would be the fifth named storm to hit the state this year. The National Hurricane Center is warning of a life-threatening storm surge. And coronavirus hospitalizations have risen at least 10% in the past week in 32 states and Washington, D.C. New Mexico led the way with a 68% increase, followed by Wyoming and Connecticut. South Dakota, Montana, and North Dakota have the most current patients per capita. The month-long surge is putting a strain on the U.S. healthcare system. In Philadelphia, demonstrators clashed with police following the shooting death of a black man. Police say the man had a knife and they shot him. According to the Philadelphia Inquirer, Pennsylvania's governor is deploying the National Guard. The U.S. government is warning of an advanced North Korean hacking group. According to the Department of Homeland Security, the hackers have targeted the U.S., South Korea, and Japan. They're said to focus on foreign policy and national security issues related to the Korean Peninsula. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Yes, big caps. We covered a lot. We're going to do that a lot in technology in the next couple days. All those big names reporting. Up next, David Sowerby going the other way, looking at mid cap and small cap. Been doing better recently. Sowerby with a gait, a step, a joy to his step, I should say. Futures a little bit better. We found a bid, negative 43. A difficult day for the markets. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Surveillance. Good morning, everyone. We're watching the politics, of course, of America. We've been Brexit-free today. That is a good and beautiful thing. But as Francine knows, we're also watching, as she has stated, the pandemic. The statistics are just simply grim. Away from that, a lot of individual stories. I know Turkish lira has come in from an 832 to an 829. We'll see what the next 20 minutes, maybe the next 2 hours brings. Right, though, on the vaunted shift from large cap, 8, 7, 12 stocks, all reporting in the next 3 days, to mid cap and small cap. Yes, the move is finally underway, but many say in the baseball line of the Dodgers, it's the first or second inning. David Sowerby is expert on gauging the baseball game of mid caps and small caps and joins us from Ancora as well. Have we finally seen a shift, David, to a bid up on a relative basis of mid caps and small caps?
I think so, because it really started at the end of March. And as any stock investor, Tom, I'm going to root for breadth or participation, that it's not a binary event. It's not all large cap or it's not all small cap, but it's something in between. But since the end of March, small cap stocks have outperformed large cap stocks by about 6 percentage points. So now it's been sustained. And the backdrop, I think, bodes well for the small caps. That is improving GDP. Their relative valuations are at some of the more discounted levels since 2003. Merger and acquisition activity, particularly in the value space, I think is going to pick up.
Well, that's right, David. I don't mean to interrupt, David, but that's exactly where I wanted to go. We saw Xilinx, AMD, and many, many other issues wrapped around the single word scale. Do officers and boards and in banking advisors to mid caps and small cap care about scale?
Probably not. They should care about being good investors, good allocators of capital. What are they doing with the cash flow that they're generating? But to that M&A environment, I saw it in firsthand. I've done this long enough that I saw it in early 2000 when the valuations were at similar relative values that they are today, that it became a much more robust environment where companies on a larger side who wanted to scale and grow found better valuations to buy and grow via acquisitions. And I think we're setting ourselves up for that type of environment.
But David, depending on who gets the U.S. election, how does that change small and mid caps? How does it change, how we look at restrictions and lockdowns, and how does it change how these companies are funded?
Well, Francine, we know we've had the most significant combination of monetary and fiscal stimulus probably that you and I will ever know, more than 40% of U.S. GDP. It's going to keep increasing. That bodes well for cyclicality. This earnings season, I've seen the cyclical stocks surprise better than more of the safety type stocks. That starts to bode well for small caps. So post the election, you're going to see more stimulus. You're going to see more sugar high on Wall Street, and that in itself is going to bode better for the down cap, more cyclically sensitive small cap stocks. So therein also, I think, is a something that's on the asset side of the balance sheet for small caps to continue to perform. outperform.
David, how many will go bust? How many will have to go into administration if the pandemic rages on for much longer and we have extra lockdowns?
Well, we saw a glimpse of that certainly in February, March, and April. But I would think that as I've listened to the tone of management teams thus far on conference calls, it was fairly robust in the second quarter earnings. It's continued with third quarter earnings. Naturally, these management teams are always cautious about the go forward amid the pandemic, but the tone of how they're seeing business over the past 3 to 6 months has been decidedly better, and that hasn't slowed down for being about 25% or so through this earnings season. I think it continues into next year, in spite of if cases are spiking because simply there's little appetite for a significant shutdown.
Very valuable. David, thank you so much. David Sowerby there, Ancora Managing Director and Portfolio Manager. Now, the Bloomberg Business Flash in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Shares of Wells Fargo begin the day at their lowest level in more than a decade. The lender was down almost 4% at yesterday's close. Investors are waiting to hear CEO Charlie Scharf's strategy. Meanwhile, job cuts and the possibility that Wells Fargo will sell off some assets are weighing on the shares. Credit Suisse has started an advisory group to focus on mega deals. Bloomberg has learned the group will pull together top investment bankers from different sectors. It includes some of the highest producing bankers at the firm. Credit Suisse has advised on $248 billion in mergers and acquisitions this year. And that makes it the 5th most active deal maker by volume. An auto insurance platform, Root, raised $724 million in its IPO. Shares were priced above the marketed range. In addition to the public offering, funds managed by Silver Lake and Dragonair have each agreed to buy $250 million in common shares in a private placement. Root begins trading today on the NASDAQ. And that is your Bloomberg Business Flash. Francine?
Ritika, thanks so much. Coming up next, we track COVID-19. Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. We also have some breaking news out of Eli Lilly announcing an agreement with the U.S. government to supply some 300,000 vials of investigational neutralizing antibody Bamlanivimab. Now, we'll try to understand and have more clarity on what exactly that means for your safety with Lauren Sauer. This is Bloomberg.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
In our business, we need data. I don't think it makes sense to guess at which would be the most effective. The good news is we'll know that, and we'll know that pretty soon. The early ones, as you pointed out, are the mRNA, a new technology that's never produced a human vaccine before, but looks pretty promising in terms of the ability to generate our own antibody response, and that's a good sign, I think, for defeating the virus.
All of us have underestimated the dramatic impact of this outbreak. I mean, if you would have asked most people 8 or 9 months ago if you would ever see the kind of impact that we're seeing around the world right now, few would have gotten it right. But I think there are lessons to be learned. First and foremost, I think, is the importance, David, of global public health. And I think going forward, we're going to understand much better that, if we don't have global public health security, we don't have national security, we don't have economic security, and we will not have security as societies.
Those were the chief executives of Eli Lilly and Johnson & Johnson speaking to Bloomberg. Now, you can also catch David Rubenstein's full conversation with the Johnson & Johnson chief executive, Alex Gorsky. That's tonight at 9 p.m. New York time. Now, of course, we continue to track the virus. Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. And Lauren, I was breaking some headlines from Eli Lilly just a couple of minutes ago, and I think we have a bit more clarity. So you rightly told me in the break, or reminded me, that actually, Eli Lilly yesterday said they were halting some trials in the antibody therapy in hospitalized patients, but they were continuing in less sick patients. And we now understand that they have an agreement with the U.S., if this were to get FDA approval, to ship them out quite quickly. So where are we on treatment of sick patients? Are we going much quicker than vaccines?
Yeah, so the treatment that was paused and then just ended from Eli Lilly is a monotherapy. It's an antibody that will be used, that they had tested in sick patients, and it sounds like that they will continue to test in less sick patients. And it's basically designed to stop the virus from infecting cells in patients who already have COVID-19. That is a treatment. So it's for someone who's already sick, and we continue to make progress in the vaccine production race, and I think there are several that are moving closer and closer to finishing up their phase 3 trials, which is good to see. We'll have to wait to see what the results look like, but I know Pfizer is close. I think yesterday they said not before the election, which is reasonable and to be expected. And Moderna is still working on their vaccine. So we have several nearing the end of completion of phase 3, which is very exciting to see.
Lauren, here in Europe, there are a number of restrictions, and certain countries also going into lockdown because a lot of hospitals are just battered by the number of infected and people needing hospitalization because of COVID-19. What can you tell us about the wave that we're seeing now? Is it because we're indoors? Is it because it's colder outside? Like, how much do we understand of why this is resurfacing now?
I think what we're seeing in this third wave or new wave is a confluence of a lot of things. It is getting colder. People are moving back indoors. That movement back indoors is following a summer of reopenings. So people going back to school, people going back to work, bars, stores, shops reopening. So all of these things are happening as we move into a season where we move back indoors, where we visit new people for the holidays, where kids come home from college. So I think what we're seeing in this uptick in cases is a combination of a lot of behavioral adjustments that we made and then sort of unmade, and then possibly the addition of seasonality.
what do we do better, or what has changed since March? Is there a less viral load? Because still, if not everyone, a good chunk of the population are wearing masks. Is it less, is it less contagious? Have more people have antibodies because we went through the first wave, or could it be potentially the same?
I don't think we have enough research completed on the contagiousness yet. I think we're doing a lot of work. Some work just came out yesterday showing that people's antibodies are decreasing as we move through this first season of the virus. The question of viral load is a really good one that a lot of people are working on. So now that we're wearing masks, there is a possibility that we're just being exposed to less virus. And we know that this works in other diseases, so it's not unreasonable to think it works here. You have to study that to understand how the viral load is impacting people's illness. But I also think that in addition to that, while it is a strong possibility, we're getting better at treating patients, and the less sick patients are going into the hospital, or the younger patients and the less sick patients are going into the hospital and potentially moving out quicker, which is good, because it means we're managing these patients better. We know more about the virus, we know more about how it works in the body, and we know more about how to treat it effectively.
All right, thank you so much, Lauren Sauer there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. We're also getting a couple of precious insights from Sam Fazeli on what we broke a couple of minutes ago. Eli Lilly saying the government will accept Bamlanivimab if the FDA grants emergency use authorization, and it seems that the price point for these shots of people who are sick is lower than some of their competitors. So keep an eye on that. This is Bloomberg.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.